6 months of the year were turbulent for investors. Markets have been turbulent, but the biggest story lies in the precious metal sector. Both gold and silver have taken a significant hit, and during this period, gold became cheaper by about 20% and silver by 43% from the record levels of January 29th. The strong dollar and signals from the US Federal Reserve not to cut interest rates put pressure on gold and silver. Gold's sharp correction appears to be changing how Indians buy the precious metal. And after falling nearly rupees 50,000 from its record high earlier this year, gold demand in domestic market has dropped by more than 70%, with many households now choosing to sell old jewellery instead of making fresh purchases, and according to the India Bullion and Jewellers Association. Even international gold prices plummeted nearly 14% in the second quarter of 2026, marking the worst quarterly performance in 13 years, with spot prices briefly dipping below $4,000 per ounce. The sell-off was driven by a triple threat: the Iran war pushing energy prices and higher, reinforcing sticky inflation, rapidly escalating expectations for Federal Reserve rate hikes, and a surging US dollar as well. Dr. Sharad Kohli, senior economist, with us on the broadcast to talk more about this. Dr. Kohli, nobody knows this space like you do, like the back of your hand. What is happening with silver? You know, there was a huge rush, I remember, last year and the beginning of this year for people to invest in silver. It was obviously said that it's a precious metal. It's running out. It's going to be useful in making semiconductors, and that's why the demand shot up. What's happened now? Why is it stagnant, sir?
Well, good afternoon, Vineet, to you and the viewers. Well, silver has got two faces. One face, of course, is the industrial use, as you mentioned, semiconductors. It's also used in AI data equipment. It's used in EV batteries. It's also used in solar voltaic cells. So about 55% of the total silver produced actually goes into industry, and remaining 45% comes for investment purposes. So I think at this point of time, Vineet, gold and silver seem to be running hand in hand. I mean, the fall in prices of gold are pretty much matching. There's something we calculate called the gold-silver ratio, GSR. So that ratio is almost running a constant. You know, if gold falls, silver also falls proportionately. If gold rises marginally, of course, these days, then silver also rises marginally. Let's try and understand, because most of the viewers, we need want to know that what exactly is happening. I mean, after that extreme bull run, starting from 24 down until 25 and early part of 26, what has suddenly happened? Because this year, if you see the gold returns, Vineet, it is from January to June, it's down by 7, and this is a very rare for gold, because gold you rarely see going down. So although we still have half of the year left, it would be premature to conclude that this year is going to be a bad year for gold, because there's a lot to happen in the next 4 months are very crucial. Let me just very briefly touch upon what happened. The Fed announced a hike in interest rates, possible hike in interest rates in the latter part of the year because of inflation in America. Kevin Walsh is the new Fed chairperson. He replaced Jerome Powell. He was supposed to be Trump's man. So he did not increase the rates, but the guidance note or the outlook seemed to be that probably the rates may go up in the level. So that, it is normally presumed that when the interest rates go up, people move from no return investment like gold to fixed return investments. That is the perception. Second, and a very important point, Vineet, is that at this point of time, there is a deliberate attempt in America to keep the dollar prices up. There's something called dollar index. It comprises of 6 currencies: Swiss franc, British pound, euro, Japanese yen, Swedish krona, and Canadian dollars. This is a basket of 6 currencies. So against the 6 currencies, dollar at this point of time has shot up to 101 plus, which is a very sharp hike. And this is artificial, because even when US was in war, I can understand because of the crude oil demand, the dollar was in demand. But now in the derivative market, in the Forex exchange in US, dollar is being artificially pumped up because they want to prove their supremacy, and they're worried that gold might replace their currency, because de-dollarization is the buzzword which is building up around the world. So that rise in dollar is causing pressure on gold. Fed interest rate hikes is causing pressure on gold. These are the 2 reasons primarily. So I feel that this fall is a deliberate attempt. It's an attempt to keep gold prices low, and it's artificial. because 65% of the people in America, they are very well aware of the economics and finance. They are also connected to stock markets. So the next 4 months, which is August, September, July, August, September, October, because November is the midterm in America. And Donald Trump is struggling to see that inflation comes down. If inflation comes down, then you will see gold prices turning around, because when inflation comes down, Fed will not hike the interest rates, and that will be beneficial for gold and silver. The magical word is that gold and silver are long-term investments. What had happened over the last couple of years is that people had started keeping it as a short-term commodity, trading commodity. They were buying and selling, like, buying today, selling after 15 days, selling. This is not a commodity which is to be traded. So for anyone, although the investment advice should be taken from your investment advisor, but I feel that if somebody buys in smaller lots over the next and keeps it for 2 to 5 years, I think it will give a very handsome return. The future of gold seems very bright. Obviously, this is a corrective phase. This is a consolidation phase, which happens with all asset classes. Look at what is happening to stock markets. So practically all asset classes, look at what is happening to property market these days. So practically all asset classes are under pressure, and gold and silver are no exceptions.
Dr. Kohli, what about the future of gold and silver? Is this also a right time to invest now that the prices have come down?
Oh yes, only if you follow two rules. One rule is, obviously this is not an investment advice, this is an analysis. Investment advice should be taken from your investment advisor. The two rules are: one should never put all money at one go. That's rule number one. What people do is they get emotional and they pump the entire money at one go. Rule number two is keep it for long term. You have to look at gold and silver for 2 to 5 years. And the 2 years is not a very, very long term. It's a reasonably, I would say, mid-term. But then for gold, it's a long term. Because geopolitical tensions, inflation around the world, global economy is sinking into recession, all these factors are going to be conducive. And the most important factor, which I like to point out here, is that central banks around the world are buying and collecting gold like anything. They have been regularly buying gold, and they are collecting, I feel, gold standard, which used to be there before 1971 when Richard Nixon was the president of America. I think that gold standard is going to come back. That is, a currency's value or strength will be determined by how much gold the country has. So the central banks are going, all international agencies, including HSBC, UBS, JP Morgan, Morgan Stanley, World Gold Council, they are all projecting that gold is going to go up in future. It's not just me who's saying that. It is based on research, and I feel the future of gold is very bright. So people who've got patience, the problem is that the normal investor mentality in India is that you tend to sell when the asset falls and you buy when the asset rises. Whereas Warren Buffett's rule is the other way around, the contrary approach. Buy when everybody is selling, sell when everybody is buying. So I think people who've got a lot of patience, loads of patience with them, they can buy and they can keep it for a longer term.
And Dr. Kohli, there's also this inverse relationship between the stock market and gold as well, isn't there? When the stock market goes up?
No, that's not necessary. Sometimes it happens. But I've got a dozen examples behind me where it has not happened. Like at this point of time, stock markets are under pressure, and so is gold and silver. So that rule is getting defied anyway. No, that happens as a coincidence sometimes, because people feel that the same money which is being pumped in stock markets is taken away from stock market and gold start rising, and vice versa. That is, money is taken out of gold. But at this point of time, neither gold and silver nor the stock market. Look at where the stock markets have been hovering around 24,000.
But Dr. Kohli, what about the devaluation of the rupee as well? How big a concern is that for you?
Here, if you're asking in relation to gold and silver, then I can tell you that 99% of the gold in India, if you're wearing gold right now, it is imported. It is not Indian. And a lot of people feel that occasions like Dhanteras or Akshay Tritiya or wedding season, they hike the gold prices. But that's not at all the case, because these are not governed by India. The gold prices are discovered in America, in COMEX, in London Bullion Market in London, and to a certain extent in Shanghai. So this is not an Indian commodity. 200 to 500 rupees difference because of Akshay Tritiya or Dhanteras can be seen. Or rupee devaluation results a little bit like when Indian government increased import duty on gold. We saw the prices rising. So the Indian factors don't determine. But as far as devaluation of rupee is concerned, yes, that's a matter of concern, because our country is primarily import-oriented economy. We have a very sharp balance of payment, negative balance of payment. So obviously, any devaluation in rupee directly impacts inflation. It makes input cost of industry more. It also puts load on the common man, which we are witnessing right now, because rupee at one point of time had touched 97. Even today, it's well above 95. So we've come a long way. When we used to be 70, 75 for a very long time, it got stuck at 80 for a long time, and it's been sliding. So primarily because we are an import-driven economy.
All right. Dr. Kohli, always a pleasure. Thank you so much.